say integration, or some people will say cross modules, cross modules integration. Okay, so cross modules. Okay, first we need to understand what is mean by cross modules integration. Okay, so now if we talk about in finance, okay, so now I have some purchased some raw material, or else I sold some finished goods to XYZ person. Okay, now can we able to record the data in finance? There is an option to enter quantity. Okay, but now while posting FB60, okay, FB70, FB50, or F-02, okay, F-22, F-43, whatever it may be, over there is an option, there is an option how much quantity we have entered. Okay, I mean how much quantity we sold, only we can enter the value of the quantity. But now the quantity, let us assume we sold is the 10 kgs. Okay, for that 10 kgs, what is the cost? Okay, 10 kgs into 100 rupees. Let us assume 1 kg cost would be 100 rupees. From where it should be determined? It should be determined from the material master record. Again, the material master where we are going to create, we are going to create into the material management. Okay, again the material management. Okay, again from which storage location it is determining? I mean, where was the material stored in the location? Okay, so all this information we cannot able to enter in finance. Okay, that is the reason we have a separate modules for inventory related transactions. Okay, then whatever the transaction which is happening in other than FI module. Okay, now in the general process, what will happen? If I want to purchase a one laptop in general process, okay, now anyone, okay, let us talk about Mahesh would like to purchase one laptop. What he used to do? Okay, in general, then first he will start the inquiry. Okay, so which one first he will decide that what kind of features he would require. Okay, how many store, I mean what is the storage capacity, and what would be the RAM capacity, and what would be the generation, and what kind of length, and okay, and screen resolution, everything he will think about that one. Okay, whether it's a i5 processor or whatever it may be. Then what will happen once the requirement will be finalized? Okay. So, once the requirement will be finalized, what will happen? Then he will start the inquiry in the market. Okay. What he will do? Maybe he will approach some physically. He will visit some shops. Then he will inquire whatever the model he is looking. Then at the same time, he is also inquiring into the online platforms. Okay. So once the inquiry will be done, then he will finalize that one, which one is offering the best features and which one is offering the best prices. Apart from the feature, price also is a matter here. Then what will happen? Once he will decide that one, then he will go for the purchase of that one. Okay, then now what will happen? If I want to create a purchase order, first I need to have an inquiry. Then once the inquiry will be done, then the next one would be quotation. Okay, how much price per unit? Then the once the quotation will be done, then we'll go for the finalization of the product. Then once that will be done, purchase order. Okay, then we are going to place the order in the wherever it may be, if it is offline or online, whatever it may be. So once we place the purchase order, then we create the purchase order. Where it is happening? That is happening into the material management. Once the purchase order, goods receipt means we have placed the order. Against that purchase order, they have delivered the goods. Okay, the goods delivered in the sense, okay, they have I mean through road or through air, whatever it may be, depends on it's a multiple transport modes, they have delivered that goods. Once the goods will be delivered, what will happen? Then we go for the invoice verification. Okay, until goods receipt, goods where we are going to receive, we are going to receive in material management, we will receive at stores or warehouses. Okay, then once that will be done, invoice verification, then up to goods receipt part, the material management, it will be happen all these activities into the material management. Then invoice verification will be happen in finance. Why only the invoice verification which should be happen in finance? Okay, the reason being that because the people or stores people does not aware the what kind of taxes need to be applied. Okay, what is the freight charges? Okay, so maybe some information may mismatch, so that could be the reason the invoice verification will be happen in finance. Once the finance invoice will be verified, then it will get passed that against that goods receipt the finance department will pass the FI document. Then once the FI document will be passed, then it goes for the payment. Final payment means we have to make payment to the vendor. This is the process. Okay, but now during this process, then that there are some transactions which are happening in there are some transactions which are happening in FI. Then which are the transactions are happening in inquiry, quotation, pro forma invoice in case, then purchase order, then after purchase order, then goods receipt. Until goods receipt, all the transactions which are happening in material management. Then after that, invoice verification which is happening in FI. Okay, see, whatever the goods receipt, against that goods receipt with respective of the goods document, that the invoice need to be, when we are going to verify FI document in FI, that information need to trigger to the FI. Okay, so with reference to that document, this we are going to call it as a cross modules. Means a cross modules integration, because whatever the postings which would required in for those postings GL accounts to be required. Okay, GL accounts, how much quantity received, what is the price per unit, what are the freight charges in case if there are any freight charges, in case if there are any if there are any additional labor charges. Okay, then for to record all this information, I would require is a GL accounts in I mean, from where FI we need to create in FI, those GL accounts we need to interlink to the module. Then only the information it will get passed to the finance module. Okay, so this we are going to call it as a integration between the cross modules. Okay, now we are only discussing about the two modules. So the integration between material management to finance, we'll put it here, material management material management to finance. I'll mention finance. Then at the same time, sales and distribution to finance. Okay, we are discussing these two modules because these two modules are the quite common. Wherever you can go, 99% in the interview they may ask you the, okay, the process apart, I mean, along with the process we need to explain accounting entries also. But going forward we will discuss about the accounting entries and all that, I will take care. But now you don't think about only finance will have a integration these two modules. If you will have the such kind of query, no, finance is the central component or backbone for SAP. Okay, the finance module will have a integration with the finance with human resource module. I'm just giving an overview. Okay, finance with human resource, why we would require HR integration? Because now I am the one of the employee, I am working in one organization. Okay, my personal data, my CTC details, everything maintained in the HR module. But now at the end of the month, they have to deduct my provident fund, they have to deduct my withholding tax, I mean TDS, then they have to make the payment salaries. But again, the payments where it is going to happen, it should happen payments, the salary payments will happen through the finance department. Again, that is the integration to the finance HR department. Again, again FI integration with the I mean CO integration with the PP production, I mean project systems. Okay, there are multiple cross modules which are going to integrate with the finance. Okay, not only these two modules. I'm just giving an overview of the integration part. Okay, but now we are going to see this and FI integration, ESD to sales and distribution to finance integration. These two modules are the quite common modules. Okay, wherever you can go, you must have the uh, challenges in these two modules only. Okay, as a FI consultant, you need to know the process and where the FI consultant job need to be there. But except these two things, but other things like material master creation, plant creation, storage location, everything will be done by the consultant. Now for SD also, sales order creation, okay, then goods delivery, then again from the billing, everything will be done into the sales and distribution, SD people, but not only wherever the financial transactions it will have impact, then only the finance team will come into picture. Otherwise each and every module will have a separate consultant. You don't worry about that one. In terms of consultants point of view, module, material management, will have a separate consultant, finance will have a separate consultants, but we will be part of the finance team, team will be differ. And this likewise, the sales and distribution also will have a separate consultants, then finance team will have the separate consultants. Okay, even either irrespective of the projects, either it's an implementation project, support, whatever it may be, each module will have a separate consultants, not only one person. Keep in mind this one. Okay, now, okay, I just have given a brief introduction about the cross modules, why we are going to call it as a cross modules. There are transactions which are happening in other than finance, but even though the financial transaction which are triggering to the finance, so that we are going to call it as a integration between the cross modules. Okay, then now the organization structure of the organization structure of the organization structure of the Can anyone tell about FI organization structure? Hello?
Client,
Yes.
we have a
Yes.
consultant.
Client. Okay. One moment. Client. Hmm. Tell me.
Company.
No,
Company.
no, no. Yes, exactly. Exactly, Mahesh. Company. Yes. Yes, good.
I think company.
First, let me put it here. Not this is not the organization structure of This is the organization structure of FI. Okay. Okay. Then client. Yes, really good. Company.
I think
Company.
company code.
Yes, exactly, exactly. Yes, yes, Mahesh. Yeah, fair enough, enough. Okay, now the organization structure of the finance. Okay, how it will be there? Client, then company, company code will be there. This is the organization structure. Okay, of finance. Ibrahim, if you don't mind, the consultant will not come into picture here. Okay, so the
Sorry,
consultant, yeah,
sorry.
no worries, no worries. I'm just correcting. Okay, just to play. This is just for your information only. Consultant will not come into picture, Ibrahim. Okay, so now so now if you want what you can do, you can use the business area concept also. Okay, now there is no relationship between any business area can be used. One business area I can use for multiple company codes. Okay, business area. Okay, so the business area concept I have already explained in detail. Okay, business area can be used for multiple company codes. There is no assignment to one relationship. Okay, but now if you want any particular such thing, then we will go for the some validation kind of thing that we will discuss during the project sessions. Okay, now this is the organization structure of finance. Now let us see the organization structure of the material management, because we need to know. But this organization structure of this is only for our information only. As a FI consultant, we should know this information. Okay, fine. FI structure, then the organization structure. Then first is a business area. So the business area is nothing but, okay, whatever the business area is nothing but my factory. Business area is nothing but my factory or plant plants sorry, plants branch, plants are branch or port. Okay, why we are going to create the port as a business area, that I will explain. Okay, now business area we have seen. Then the storage location, because in material management now area wise, now I have the factory which is running in Hyderabad, Kukatpalli, let us assume, or one more factory which I am having in, let us assume it's in a Bangalore location. Okay, so some industrial area. Okay, so the business area, I mean, we have the factory we are going to use as a business area wise. Okay, now the next one is storage location. So where I want to store my materials, either it's a irrespective of the material, either raw material, semi-finished or finished or whatever it may be, storage location. Then the storage location, I can store raw materials, then finished goods and packing material, or it's semi-finished goods. Okay, I can store any kind of material, but now business area, storage location, these two are important. For the EMM, and also the plant also going forward, we must have to define the plant. Okay, now business area we know. Okay, where the factory which is running. Okay, then otherwise the place, where is the place, the factory which is located. Then the storage location, what kind of materials which we are storing. Then the next one is that, okay, why we are created port as a plant. Now the last one where you can see port, I just have mentioned. Okay, so here why we have created the port as a, okay, plant. Okay, let us assume what will happen.
Vijay, can we
Yes.
consider storage location like we are storing some raw materials now? So can we consider as it go down or something?
Yes. Storage location is nothing but a warehouse only. Okay, storage location is nothing but your warehouse. Okay,
Yeah.
whatever the
Okay.
materials you want, you can store it. That is what it's a storage. But in SAP terminology, we are just mentioning the storage location. Warehouse, you can just you can imagine it's a warehouse. Okay,
Okay.
okay, fine. So now why we have considered port as a I mean plant. Now if we talk about, now let us assume I am manufacturing in Hyderabad. Let us assume our organization which is located in Hyderabad. Then what will happen once the manufacturing will be done? Okay, then we have to ship those products to the until Mumbai port. Okay, let us assume. Okay, what the customer will request, I mean whoever bought the raw material. Okay, so whoever placed the sales order. Okay, then I mean purchased the I mean goods, I mean material from us. Okay, then he requested, okay, it is your responsibility to bring the goods or to ship the goods until shipyard. Okay, shipyard in the sense, okay, it is our organization responsibility. We need to load the goods in our factory Hyderabad. Then we need to send those goods until to the Mumbai port. Okay, then until to ship the goods into the ship, then till our responsibility, something goods, something damage will happen, if something XYZ reason, whatever it may be, then that is our responsibility. So that is the reason we are going to the port also. It's a one kind of the, okay, the port also, I mean the ownership, I mean port also, we are going to treat it as a one of the plant or business area, whatever it may be. So because what will happen, until to transfer, until to ship the goods until there, then it is, I mean till the responsibility with us only. Okay, once the goods will be shipped into the ship, then our responsibility will be over. Okay, that is the reason. Okay, even port also, as a port also, it's a one of the if we can talk about is a, okay, as a plant. Okay, now business area, business area will be assigned to the plants. So what will happen, because this business area will be assigned to the plants. Okay, plants will be assigned to the sales organization. Okay, okay, plants will be assigned to the sales organization, then business area will be assigned to the sales organization. Okay, see, now in this complete cycle the business area will play the key role, because business area will be assigned to the plants. Okay, remember, okay, this will play the key role. Okay, this will play the key role, business area. That is the reason I just mentioned the business area. Okay, now business area, and we have seen the organized storage location. We are clear about this one. Now let us talk about the movement types. What are the movement types which are there in? First of all, what is mean by movement types? Okay, first of all, what is mean by movement types? We need to understand that one. Okay, so the movement types are similar to the posting keys in FI. Okay, now whenever we have posted documents in finance, okay, when we posted a documents in finance, okay, we have, let us talk about, let me open the SAP. Now F-02. Okay, anyone, you can take anyone. Now this is the posting key. If I want to post, if I want to enter some debit transaction, okay, the posting key is a 2-digit numeric key. Okay, it is there in the, I mean, we can change it also. Okay, so in finance we can enter the posting keys. Okay, we can enter the posting keys, but the similar way in in material management, we have the transaction, we have the we have the movement types to identify the business transaction. Now let us assume, if this line item, I would say this is a debit entry. How can I say this is a debit entry? Because the posting is a 40 is the GL debit, 50 is the GL credit. Okay, based on that, okay, the similar way in also there are movement types are there. Based on the movement types, we can able to identify, or we can understand what kind of transaction is this. We can able to understand that one also. Okay, so important things, but movement types will be determined by automatically by system. Okay, you no need to enter, but some places where the consumption will happen, but some places we must have to enter the movement types. For when we are bringing the opening stock also, opening stock means when we are uploading the balances at first time in the implementation project, okay, we need to enter some movement types. But apart from, there are few situations where we need to enter the movement types manually. There are some transactions without manual intervention, system will determine nature of the transaction. Remember, okay, that we'll see that one. Okay, now movement, sorry, movement types in Okay, now what is mean by movement types? Then similar to similar to similar to okay, posting keys in FI, posting keys in finance. Okay, now what are the movement types? See, what are the important movement types only I am describing here. Apart from this, there are many movement types are there. Okay, but only the important movement types I am describing here. Okay, now the movement type is a 101. Okay, I'll mention like this. Type description. Okay, fine. Okay, fine. So movement type 101. Material receipt against purchase order. Okay, purchase order or production order. So what will happen here, whenever you will see the movement type 101, this is going to representing that one material receipt against purchase order. In simple terms, now I have placed the purchase order. Okay, so on behalf of that purchase order, I have received the goods. Okay, so simple thing is that, okay, now I have received the goods from the from the supplier. Okay, 101, or else production order is nothing but okay, now there will be a different to manufacture a product. Okay, I have issued raw material to manufacturing. Okay, to produce the product. Then what will happen? I have received the orders from the, I mean the goods from the production order. Okay, there was a production order. On behalf of that production order, I have issued raw material. On behalf of that raw material, the plant I mean plant site, they have done the manufacturing. Then the final, the finished goods, they are sending back to the warehouse. Okay, so then 101 is the movement type. Then 102 is the reversal of 101. What will happen in case if we would if we want to reverse this goods receipt? Okay, then we can go for the 102. Okay, then what is the next one is the 201, issue to cost center. Issue to cost center. Now I want to issue raw material. Okay, by I mean okay, based on cost center. Okay, particular identifying. Okay, I want to identify the cost center. Maybe I want to issue, okay, particular cost center, that raw material. So in that situation, I can use the movement type is a 201. Okay, then 202 is the reversal of 201. Okay, remember. Then the next one is the 261. Okay, 261 is the issue to order. Okay, issue to orders. Okay, now you can see here we have issued material to particular cost center. Here we are issuing material to the orders, production orders, remember. Okay, then 262 is the reversal of the, okay, 262 is the reversal of the reversal of 261. Okay, reversal of 261. Next one is a 521. 521 is the production receipt. Production receipt without production order. Without production order. Okay, we have received the production, but there was no production order. Then exactly the 522 is the reversal of the 521. I'll mention reversal of the 521. Then the next one is a 561. I was mentioned, right? Okay, so during the master data upload kind of thing, we need to use the, okay, we need to use this one. Then so 561 is the so for opening stock, 561 is the opening stock taking. Okay, opening stock. Then 562 is the reversal of 561. 561. Then 601. Okay, 601 is the delivery. So delivery, okay, delivery where it will come into picture. So delivery, it will part of the sales. Okay, so sales, I sold the goods, I want to deliver the goods to the customer. Okay, then 602 is the reversal of 601. 601. So these are the minimum, these are the important movement types. Okay, we need to aware being as a FI consultant, because while seeing the business transaction, okay, we need to able to identify. Maybe it's a less chance out of 100%, then there is a 10% chance to ask the movement types also in interviews. Okay, but now the process, it's mandatory, the process. Without this process, without the process cycle and all, okay, then there will not have any interviews. But we'll see, I will explain you that process and all. Okay, fine. Now okay, okay, then what is the difference between, okay, now if we talk about 261 and 201, what will happen now? The 201, between the 261 and 201, okay, 201, see this 201 and 261, okay, the difference between both. Now particular cost center wise, I am issuing raw material here. Here I am here in 261, the moment type, I am issuing raw material to the particular production order. Okay, particular production order. Okay, that is the only difference between. Okay, in this material you can identify with help of the cost center. Okay, in this one you can identify with you can identify that with help of the order, production order, remember. Okay, then we have discussed about the movement types. The next important thing is that transaction keys. What is meant by transaction keys? Now we have a in okay, now the movement types, okay, to identify my business transactions. Now for what purpose I would require the transaction keys? Now I have received a goods, let us assume. Okay, so whatever the transaction, if I received 100 quantity with 10 rupees per unit, what will happen? That information need to record into my GL accounts, because without GL account, none of the transaction will not post in. Okay, will not be available, I mean we cannot post. Okay, then what will happen? Where can I interlink the GL accounts? Okay, to record all the inventory related transaction, either it's the internal movement, external movement, or whatever it may be. All those transactions, if I want to record into the GL accounts, then where can I record? Where can I record the transaction? Okay, now to record my business transactions, okay, or to interlink my GL accounts, okay, then transaction keys are play the vital role. Okay, the transaction keys, in this transaction keys we are going to map the GL accounts. What are the transaction keys are there? Okay, let me show you. This is where you need to know, this is the place where you need to know the, I mean where the integration it is going to happen. Transaction code OBYC, MM and FI integration, it is going to happen. The transaction code is a OBYC. I will write it over there. Now you can see here the transaction keys are there here. Okay, there are many transaction keys are there. It depends on your business requirement, you need to map your GL accounts here. Okay, where, how can you map the GL accounts? Okay, for inventory related transactions, for inventory postings, you can see here the BSX is the transaction. Inside of this one we need to map the GL accounts. Okay, first you need to understand automatic posting. See, maintain FI configuration automatic posting procedures here. So meaning that whatever the transactions which we want to trigger, our system need to determine the GL accounts. Okay, then this is the place where we need to integration happening in between the finance and MM. Okay, then MM and FI integration will happen at transaction code OBYC. Remember, this is the transaction code is important. 100% you need to tell this one into the interview where the integration is happening. OBYC is the transaction code. Then let us see the transaction keys. First of all, let us see the transaction keys. Transaction keys are processing keys. We can say process keys, transaction keys or process keys, what we can say. Then here is the transaction key. Transaction key, then description. For what is the transaction key? For what purpose we need to use that? Okay, where, let's see this one. Now the transaction key, let us see the BSX. The first one is okay for inventory postings. For inventory postings. Now inventory postings, now let me show you the practical example here. Okay, now anyhow we will also do the same thing, but for our understanding purpose, if I go inside of this one, let me take, I mean, existing company code for other batch people. Now you can see here this chart of accounts, even this configuration will be done at chart of accounts level. Okay, so the chart of accounts level is nothing but which are the company codes are following the same chart of accounts, then this configuration will be applicable for all those company codes, remember. Then now you can see here the valuation class we will define. Now you just focus now on the GL accounts here. Now see, now wherever the inventory transactions which are happening BSX, now these are the GL accounts need to hit. Okay, based on the valuation class. The valuation class will be interlinked your material master, that we will see going forward. But now you just focus about only the GL accounts here. Okay, here you can see here under BSX we have the account GL accounts. This is for inventory, this is for finished goods, what I have mapped the GL accounts. Okay, remember. Then so these are the GL accounts. Okay, so these are the GL accounts I have mapped here. The similar way for others also, what are the important transaction keys also we must have to map here. Okay, then let me here one moment. So the next one is the WRX. Then the next transaction key is the WRX, goods received, goods received, goods received, invoice received. Okay, then goods received, what we could say this one is a GRIR. Okay, so GRIR clearing account is an important one. Okay, what is mean by the GRIR clearing account? Okay, we need to understand this one also. It's a very important one for your interview perspective also. Okay, GRIR, we should know the GRIR clearing account also. Okay, now let us assume, okay, see, let us assume today, okay, for GRIR we'll talk about here. Okay, first let me, okay, otherwise I will explain here itself. Okay, now 10th of, okay, I'll take it here. 15th of, okay, 20th of February, 20th of February 23. Okay, what we have done, we have placed the order. Okay, created a purchase order. Purchase order is nothing but you want to buy some product, you have placed the order. Okay, remember, okay, the concept understand here. It's a very important one for you. Okay, then what you have done, you have placed the purchase order. Then once the purchase order will be done, placed, then maybe 24th of February, 24th of February 23. Okay, then goods delivery. Okay, so as part of the delivery, okay, they have delivered goods. Okay, then once goods delivery will happen, okay, once the goods delivery will happen, remember, until now, okay, we know only the where the purchase order we have, I mean, maybe the department placed material management, goods received at stores. Okay, then on 25th of February, 25th of February, okay, received an invoice, received invoice copy. Okay, received invoice copy. Okay, here let us assume for purchase order, here understand the concept, understand here. Once again, I am repeating, please try to concentrate here. The purchase order I have placed is a 100 quantity. Okay, I don't know about the price and all. Okay, I have placed for the 100 quantity. Okay, so the quantity I have placed, okay, 100 quantity. Then, so then what will happen? I will, this one I will drag one moment. This one I'll put it down here. Then what will happen on 24th of February? From this 100 quantity, they have delivered around 70 quantity. 70 quantity. Okay. What will happen? What will happen here? Here still yet to deliver. Okay, still they have to deliver 30 quantity. Again, they came back on 25th of, okay, 25th of February 23. Again, the pending goods has been delivered. Then what will happen? 30. So total it is matching. Let me change this one date also here. Now, okay, so here what is happened here? Here we have the invoice copy. Okay, so here we have not received invoice up to now. Okay, here even we have not yet received the invoice copy. Then so now the goods which I have received here, remember 24th I have received some portion, 25th I have received. But now where can I, because until to receive invoice to me, okay, then I don't know what is the price per quantity, because maybe in the purchase order it will be there the price, but maybe the price might be vary. Okay, so in such situation I want to show, or else you just simple terms you can think about, out of 100 quantity they have delivered 70 quantity against this purchase order, then the rest 30 quantity is pending. Okay, until to deliver this, okay, until to deliver the pending quantity, the invoice, I mean the purchase order, it will show as a open state. Open state is nothing but a, it should show the, okay, the deficit, okay, the quantity. Okay, so once this will be delivered, then this will become zero, the purchase order will become zero, then the deliver quantity will become, both delivery quantity and my purchase order quantity should be equal always. Okay, now to manage, okay, this is the one kind of situation. Then to manage the, or to manage the time difference between goods receipt or invoice receipt, understand here 24th or 25th we have received goods, then we have received final invoice from the from the vendor on 26th of February. Okay, so to manage the time gap between goods receipt and invoice receipt, okay, then we would require is a GRIR clearing account. Okay, GRIR clearing account is a balance sheet account, and it is a liability account, and it is a temporary account. Okay, so what will happen once the goods receipt will be happen, once the goods receipt will be happen, what will happen, once the invoice verification will be happen, then this will become zero. Always GRIR account will be zero. Always the GRIR account will be zero. Okay, so this is a temporary account, but to manage, or to manage the time difference between GR is nothing but a goods, I mean goods receipt or invoice receipt. To manage these two differences, then we would require is a, we would required is a, then GRIR clearing account. Understand this one, the concept of GRIR clearing account here. Okay, then the next key is the PRD. PRD is a price difference. Price difference. Okay, so the price difference, production order difference. Production order differences. Okay, now I have received a now what will happen in purchase order? Okay, I have mentioned that per quantity which I am going to buy is a 10 rupees. Let us assume 10 rupees per unit. Okay, I just have mentioned here is the, okay, 10 rupees per unit. 10 rupees per unit I have placed the order. But now when I received the invoice from the vendor, he mentioned that per unit cost would be a, per unit cost would be a 12 rupees. Okay, what will sorry, okay, 12 rupees here. Okay, then there is a difference between, there is a there is a difference, price difference between purchase order and invoice. Okay, this we are going to record into the price difference. Okay, anyhow there are multiple business scenarios are there, we will see that one. Okay, so this is also important thing. Then GBB, the next one is the transaction key, is the GBB. So the GBB is nothing but the transactions which are happening within office premises. Okay, what is mean by within office premises? Let us assume there is a manufacturing plant which is available. It's a okay, so some industrial area. Okay, thus in the same place they have the warehouses also. What will happen then at this, in the same manufacturing plant there are three processor. Okay, to manufacture the final product, then they have to finish the three type of they have to process the three processes. Okay, let us assume the process one is that they need to chop the raw material. Then process 2 is that they need to make it some shapes. Then the process 3 is that to assemble the product. Then the final output will come into picture. In this process, then what will happen? The process, once the goods chopping will be completed, once the raw material chopping will be completed, then it will move to the next stage. Next stage is nothing but to make some shapes. Okay, so then whatever the internal transactions are, I have issued some material to the some okay, so here some production receipt. Okay, without production order. Okay, there are different transaction, there are different goods movements which are happening in with this within office premises, that we are going to record. I mean, we need to map the GL accounts into GBB. Okay, so offsetting accounts, what I would say here is the offsetting entry for inventory posting. Inventory postings. Then again under this one there are different transactions which are going to happen. Then let us assume one is a is a VBR. VBR is a consumption. So consumption is nothing but a, now I have the raw material in my warehouse. Okay, I want to issue those raw materials to plant to manufacturing purpose. Then the material which I am consuming from the warehouse, then I am issuing those material to the plant. Okay, so then the consumption of the raw material, how can you record? Okay, because each and every moment you need to record, then only the system will give the output of the results. Okay, now you have the 100 quantity, you have consumed is a 10 quantity. What would be the your next available quantity? 90 quantity. Because if you are not going to record all this transaction, system will not show you the proper output. Okay, then VBR is the consumption. Then the next one is a VNG. VNG is a scrapping. Okay, in case if there is any scrapping, we need to, okay, map the GL accounts into the VNG. Then BSA. BSA is the opening stocks. Opening stocks. Then the next one is the ZOF. ZOF is a production receipt without production order. Production receipt without production order. Then the next one is the then AUF. AUF is the production receipt with production order. Then I'll copy and paste it this one, only the production receipt with production order. Then the next one is a VAY. VAY is the delivery where sales account is not created as a revenue element. Okay, delivery. Sales account is not created as a revenue element in case CO not implemented. So whenever we are creating all primary cost elements, in that what we used to do for the sales, for the revenue transaction, we will select the default one is the 11. 11 is the 11 is the default for the revenues cost element category. Okay, so for that one, okay, if CO not implemented, then the next one is the AUF, production order differences. Production order differences. Okay, so these are the important transaction keys are there. Okay, then going forward, again we will discuss, there are multiple business scenarios are there. Okay, so then the next one which we are going to discuss about the the valuation class. Okay, so the valuation class, valuation modifier. So these are the important things. Okay, now okay, fine. Now valuation class, the next one is the this and all you need to aware. Valuation class, what is mean by the valuation class? Okay, valuation class is determine the GL accounts to be posted automatically. Okay, then valuation class can be used for to determine the GL accounts. Okay, so in the valuation class, okay, we are going to map the GL accounts. Now you can see this is the valuation class. You can see here valuation class, but where this is linked to determine this GL account, this valuation class is linked to your material master in the accounting tab, in the accounting one tab. Okay, so then material, whenever we are using that material, now I am using a raw material. Let us assume the raw material is a rubber. Okay, that material is interlinked to this valuation class. Okay, then this valuation class already interlinked to the GL accounts. Okay, in front end what I am going to use, I am going to see only the material master. But now in that material master already there is an assignment. So based on this relation, the system will determine the GL accounts. That we'll see that one. Okay, now valuation class determines the GL accounts, determine the GL accounts to be posted automatically, then the how you can differentiate the raw materials. Okay, based on the raw material wise, based on the however you want, you can differentiate the valuation classes. And now you want to have a separate valuation class for your local purchases, then you can have a separate valuation class. Then if you want to have a separate valuation class for your import raw materials, then you can have a separate raw materials. Okay, then or if you have a separate for finished goods, you can have a separate raw material, you can have a separate valuation class, because wherever you want to record your business transaction in separate GL accounts, then you can use the it. Okay, now now the valuation class raw material wise we can use is a raw material, sorry, raw materials. Okay, so then here I have a raw material. For local raw material it will be there, then imported, then inter unit purchases. So here I can have a valuation class for each and every material types. Okay, different. Okay, intercompany purchases, then okay, so then you can have a separate valuation class. One is for local, another one is for import, another one is for imported, another one is for inter unit, another one is for intercompany. However you want, you can keep it as a, okay, you can have a separate valuation classes. Then for finished goods, okay, then for finished goods, so finished goods you will have a separate, okay, for finished goods you will have a separate valuation class. Okay, now let me put it the separate way here. For all raw materials you may have the, let us assume, one valuation class, or each material wise we can have separate valuation class. Remember, then for this one, for finished goods we will have separate valuation class. Okay, for finished goods we will have the separate valuation class for this one. Okay, so it's a depends on your requirement. The valuation class, it is going to interlink to your material master record. Okay, that let me show you that one also. Okay, we have seen the valuation class. Okay, let me go to the mm03 in case of material. Okay, fine. Let me display this material, whatever it may be, basic data, basic. I don't want only accounting one. So because in this accounting one only, we are going to map the valuation class. Valuation type. Okay, let me see this one. Now come to the straightforward. I'm just coming to the accounting one tab. Okay, this and all views I would say. Now you can see here for this material master. Okay, this is the material master record. Like how you have the master records for vendor, customer, asset, GL accounts. This is also for material. We will have a separate master data. Okay, finished goods. Then now you can see here the valuation class. This valuation class is assigned to this material master. Okay, now you can see here. Okay, this is the valuation class. This is assigned to your material master. Then this valuation class is tagged to this GL account. Okay, whenever you are creating any purchase order, whatever so on, okay, then purchase order there will not have any accounting entries. Okay, but now goods receipt, then for this material we can use the material master number only, this number only. We are not using any GL accounts, okay, to direct postings. So system will determine them by automatically, remember. Then okay, this is the relationship. Okay, now tomorrow we'll see that one valuation grouping code. Okay, valuation modifier and valuation modification key. Okay, then after that there are price controls are there. Okay, then once maybe tomorrow also it will take the full session only for the discussion, only. Okay, please try to attend the session also tomorrow. Stop the recording. Okay, so see you tomorrow.